Hello, I'm your host Prasanna Rajgopal. I'm back with a weekly update on the performance of the Vanguard ETFs. This update is for the second week of October 2023. So let's get started. Here are the key takeaways from the past week. The action in the ETF, specifically in the utilities and the real estate sector, seemed to indicate that the market thinks interest rates have peaked in the US. The markets may be proven correct, so we need to watch this trend very carefully. The utilities and the real estate sectors are interest rate sensitive, so rise in the price of these ETFs may indicate that the Fed may be done raising rates. The Hamas-Israel war in the Middle East, coupled with the lack of any new oil supply, kept the focus on oil prices, and their strong run continues as seen by the energy ETF. There was a broad comeback in the market during the past week, with 11 out of 23 ETFs tracked gaining during the past week. The energy sector was the best performer with a 4.7% gain. The utilities and the real estate sector, which got pummeled over the past few months as rates increased, came back strongly during the week. With the performance of both those ETFs, the market seems to believe that the Federal Reserve will not raise rates further. The small cap stocks continue their weak performance. Overall, the market trend and strength was unchanged when you compare the current price to the 200-day SMA. Like week 1 in October, just 6 of the 23 ETFs are trading above the 200-day moving average. Some of them are just barely above the 200-day moving average. For example, the financials ETF is trading about 0.6% above its 200-day average, and the S&P 500 index is trading just 0.9% above its 200-day moving average. That tells you that most sectors of the economy are fragile currently. If this is the end of the increase in interest rates, and if the economy continues to stay strong, we could see a nice rally in the markets in the remaining 2.5 months. Like week 1, only the energy ETF is trading above its 50-day moving average. The rest of the 22 ETFs are trading below their 50-day moving average. Now let's look at the performance of the various sectors over the past year. As you can see, the utilities is the only sector with a negative performance over the past year. And look at the performance of the technology sector, gaining 38% over the past year, with massive gains from the magnificent 7 stocks: Nvidia, Microsoft, Apple, Tesla, Meta, Amazon, and Google. The communication sector and the industrials sector have performed very well, returning over 20%. Industrial sector might have benefited from the subsidies and the bills passed by the federal government that gave a lot of money to the infrastructure rebuilding in the US. But when you look at the returns over the past 3 months, 10 out of the 11 sectors are down. Energy was the strongest sector with a 9.4% gain. Thank you so much for listening. I'm grateful for your time. Please subscribe to my channel. And if you wish to follow me on LinkedIn, please do so. I also write on the Seeking Alpha platform, so you can check out my articles there. I'm grateful for your time. Thank you.